All right, everybody. Stocks by the numbers. Welcome back. I know I'm coming to you late today, but I wanted to do an update on a company that we've obviously been looking at for quite some time. And I said, in my opinion, slow and steady wins the race. Now, we had big news coming out on Coca-Cola Consolidated Incorporated, ticker symbol COKE, listed here on the NASDAQ. The stock exploding today, up almost 20% at one point, over 150 points on this now $1,011.68 stock here that hit a new high, new all-time high of $1,030. So basically, this company initially brought to you all the way back here, March of 2023. We're talking about 14 months ago, right? So you'd be up close to 100% while being paid a dividend to own it. With also, there was a special dividend paid out here, 16 and a half, after the bull drop there in January. And of course, this is now a long-term capital gain, right? So you're paying about half the amount in taxes. And in my opinion, that is probably the best way to do it. And I know that it's boring and you don't wake up tomorrow and have doubles and triples on your money. However, if you look at a lot of the stocks that I brought to you on this channel a year plus ago, a lot of them have seen amazing growth over the long-term period, and you would have made some stable, consistent returns, and again, you'd be paying far less in taxes. And we're talking about stocks like US Steel at sub 20 that went up to 50, got involved into a bidding war. Stocks like Coke here up almost 100%, consistently climbing for you. Honestly, the list goes on, but Coke, basically, we're talking about an $8 billion company. I know now we have a market cap of about $9.5 billion on this pump today, but on the announcement of their earnings yesterday, the company said that they're planning to take on debt to enact a share repurchase of $3.1 billion on their $8 billion company, equating to about 40% of the stock. That would reduce the number of shares, which would yield a higher EPS. But overall, even after this pump, in my opinion, the stock is still undervalued, and chances are is probably going to continue to climb higher, and we're probably going to see 1200 probably, in my opinion, over the next couple of months, going into the next earnings report as well. Market cap $9.5 billion. We have a PE of 20. The EPS has been pretty solid, pretty stable, and the sales have also remained pretty solid and pretty stable as well. And if we look here over the years, we can see we went from sub 5 billion up to 5 in 2020, and then jumping about 10% revenue up to north of 5.5 billion, about another 10% up to 6.2, and looks like about maybe another 7% here going into 23, 6.65 billion. Net margin percentage a touch over 6%. You guys know sometimes I like to look at the annual revenue and then look at the actual market cap, the actual value of the stock. And again, even right now after this pump, 6.65 billion for 23, $9.5 billion market cap. This company still, after this massive insane run, is trading only 1.5 times annual revenue, which means if we get that even up to 2 times annual revenue, that would equate to about a $13 billion market cap, which would be roughly 40% higher than where we're currently trading, which would equate to about a $1,400 stock. And in my opinion, over time, we have a very, very good chance to see that return, to see that level. Look at the volume that came in here. I mean, you'd have to go all the way back to July 22, the last time there was that much volume on this stock. And in my opinion, this is how you should be investing. Again, this is just my opinion. But if we're talking about actually laying out a portfolio and how to generate yourself better financial stability over the longer term, it is situations like this. Follow the money, follow the revenue, follow the stability. So Coke, again, I know it's the end of the day, the market's just closed, so I'm sure technically this is old news for you guys, and I'm sure you heard about what was going on. The stock was obviously trending, and now all of a sudden everyone's looking at it, and everyone says, oh, I wish I owned it a year ago at a couple of $100, I'd be up huge. Should I buy it now? What should I do? And that is truly the definition of the Johnny-come-latelys. Now, again, I'm not knocking them because this is kind of an under-the-radar stock that a lot of people don't know about. But again, brought to you on this channel over 12 months ago, back here, early March, roughly $540, $550 a share. Stock now well over $1,000. let's look at stock charts very quickly. And we can see, obviously, the RSI exploded through the roof, hitting almost 83. The stock hit 1,030 and then slowly started to tick back down, well above the top resistance level there on the daily, of course. And the MACD obviously spiked up to the upside. But also, let's check our Bollinger Bands here also. And we can see we completely broke out of the Bollinger Bands. So, see, now it's a little bit of a different story. Now I feel like we can't completely look at these technicals, right? And even a lot of traders may pull up a stock like this now and say, oh, look at the RSI. Now it's above 80. It's overbought. It's going to go back down. Well, not necessarily, in my opinion, because, again, first of all, in my personal opinion, the stock is still severely undervalued in the numbers, severely. So over the longer term, I still personally see a lot more growth to come. But also on top of it, the fact of the action that was taken, again, $3.1 billion share repurchase on an $8 billion stock. See, unfortunately now, we are technically in uncharted waters. We're at these all-time highs. And in my eyes, these technicals, they aren't really the main leading indicators. Now, I honestly think here in this moment, it is more about the fundamentals. And I think there are a lot of investors and a lot of analysts out there who are literally viewing the situation as I just laid out to you, and they are not looking at resistance levels, where could it pull back on support, what's the RSI sitting at, how's the MACD look, what's the VWAP. I honestly believe all of those technicals go out the window. Because now in this current moment, we have to focus on the undervalued fundamentals, in my opinion. And even looking here on the weekly, we can see RSI well above that 70 benchmark, but potentially it doesn't matter. Even if it wants to maybe pause for a day and dip slightly below, excuse me, oh my goodness, and dip slightly below 1,000 back to about 950 here, this top Bollinger Band, chances are it's going to immediately pop back up and probably hit like 1050, 1100. And also adding to the situation, looks like the MACD has actually crossed to the upside here on the weekly. So really the only thing in my eyes that would actually, that could be viewed as a metric to try to justify a pullback would really be the RSI. But again, in my opinion, I think that I think that it's irrelevant because the company flying underneath the radar for so long, doing so well over the long term, over all of these years, consistently, I think that now it is all about the fundamentals. And also here we can see that the next resistance level here on the weekly, looking at our pivot points, our next resistance level is 1,083.51. In my opinion, I think that's a layup. And that's why, even if it wants to pause for a day or two, and you want to let the RSI adjust, and some short sellers might come in now after it popped and hit these highs, I mean, obviously it's up to them. Whatever you do with your money, of course, it's entirely your own prerogative. But I will say this right now, just as I said it all the way back here over a year ago at 550, this is a company that should absolutely, unequivocally in my eyes, continue to climb higher. And I even think it's only a matter of time before we hit this 1250 mark as well. So if you are potentially stepping in to bet against this stock, obviously I do wish you the best of luck. I hope everyone watching makes a couple of bucks. But I will go on record and say, if I was to bet against the stock, I really don't think I would consider Coca-Cola Consolidated. Because, again, this is a company that that can easily continue rallying 20, 30, 40% from this level. And in my eyes, it would actually be justified. It wouldn't be an overreaction. But also, I wanted to switch over very quickly to Safe Bulkers. Ticker symbol SB, listed here on the New York Stock Exchange. This is a shipping company, and I spoke about this a couple of times, and I gave some updates along the way, but I know that this is not the most popular stock that a lot of people don't speak about. And whether it is that you don't know it exists, or it's a fact that you just don't like investing into shipping companies, totally understandable. However, this company, Safe Bulkers, has been pretty consistent as well. And with a market cap here of about 610 million, we're getting paid a dividend yielding almost 4% at this level, even after the stock climbed and broke above these resistance lines that I drew out recently, hitting a new 52-week high today of $5.48, jumping almost 5.5% with kind of mixed markets here throughout the day, selling off here later in the afternoon. But SB has just been too consistent, and I believe all the way back here, August of 22 was the first time that I brought this stock to the channel, and you can see obviously it was at about 3.25, and now the stock is approaching 5.5. So again, this is another situation of slow and steady wins the race, and you have to deal with some short-term volatility to get the long-term growth. And now that it's at highs, and now that people missed it at $3, $4, now they're going to look at it, they're going to analyze it, and they're going to, excuse me, consider taking a position in a stock like SB, when at the end of the day, if you were a member of my channel and you saw some of the stocks that I was personally bringing to the table, again, just giving my opinion on it, not financial advice, but if you saw some of the stocks that I was bringing to the table here, I mean, you can see the phenomenal growth that we're seeing over the longer term. So again, you'd be up roughly, we're talking 66%. You'd be up 2/3, going from, 3.25 to 5.5. You're getting paid a dividend this whole time. And even if you wanted to lock in profits right now, you, of course, would be paying half the amount in taxes as it is a long-term cap gain. So in my opinion, this is why I feel I'm personally more successful in the longer term, because it is much easier to look at the broad view and just try to see the growth and the outcome that can take place over the longer term. People ask me all the time about all of these other trending stocks. Oh, Apple's up 2%. You think it's going to pull back to this level? You think it's going to break up? What do you think? Should I buy calls? Should I buy puts? Let me tell you something, honestly. I have no idea. And even if you follow a lot of these quote-unquote trading YouTube hobbyists here that offer their courses for you for their alerts, you and I both know they are not correct all of the time. And, the average person out here, 60, 70, maybe 80% success rate if they're lucky. So people always want to try to bash the fundamentals, and everyone wants to make the quick trades, the quick returns. And believe me, I respect it. Like I say, if you have a strategy in place and you are consistently successful, then stick to it. More power to you. But to deny the fundamentals, looking at the growth that we're seeing over the longer term, again, stocks like Coke, stocks like SB, stocks like AutoNation we looked at. Again, AutoNation, I remember doing a video on AutoNation. A couple of months later, the stock was already up like 50, 60, 70%. So there are multiple long-term growth plays for you to make. And obviously, if a company pays out a dividend along the way, it's even better. So this is basically the strategy of work smarter, not harder, in my opinion. But SB is another one that has just had phenomenal growth over time. And now we can see, even looking at the pivot points here on the weekly, our top resistance level 501. We came up, tested it, had a slight rejection pullback, and then boom, the stock just started chunking up and has been looking phenomenally well, in my opinion. Still undervalued, in my opinion. I think over time you could probably easily see $7. RSI up here now at almost 74. Could potentially pause, but again, if it's undervalued in the fundamentals, it may not always come back to how the MACD looks or how the RSI looks. And even if a lot of traders are going off the RSI, chances are it will literally pause maybe for a day or so and then probably continue higher. MACD's been climbing steadily. Next resistance level on the daily is 555, which, if we had another hour, chances are the stock would have hit that today, as it was on the up and up for most of the day, closing at the high of the day right at the end before market close. So, these are just two stocks that I wanted to review. SB, again, I figured I'd slip in there. It hit a new high today. It's been doing very well, so I figured I'd just bring it to your attention. But Coca-Cola Consolidated, COKE, again, now everyone's talking about it. Now it's trending. Now there's videos. Now people are analyzing and actually trying to give you potential advice on whether you should jump in or jump out of COKE. Meanwhile, on this channel, you probably could have already owned it down at 500 and change, and you'd be up close to 100%, again, long-term, paying half of those capital gains. So Coca-Cola Consolidated, chances are probably going to get some price target increases. over time. 3.1 billion share repurchase. Sales increase. Coca-Cola, almost a 30% stake in Coca-Cola Consolidated. We know where the winners are on this channel. We know where the winners are on this channel. So that's why if you want to, come in the Discord and you want to bash me about short-term trading, hey, listen, that's fine. And that's obviously the hardest way to make money, which is why you get the most reward. Makes sense. High risk, high reward. But again, at the end of the day, in my opinion, only a small portion of your capital should be used to generate income off of speculative option trading. The bulk of your other capital should be invested into, it doesn't matter if it could be bonds, income funds, mutual funds, steady growing ETFs, or again, even under the radar stocks like COKE. What about CBOE? A lot of people, again, that's an excellent stock. A lot of people don't even know that CBOE trades public. That's the Chicago Board of Options Exchange. This is a company that generates revenue off of transactional fees from options volume. So as you guys are trying to find an option play and make 1, 2, 500% returns on your options, you can just be buying the house that makes money off of the option, whether you win or lose, and has been consistently growing over time. And even with this stock up here in the 180s now, 19.3 billion market cap, the PE still less than 25. We're getting paid a dividend to own it. Look at the EPS, stable, steadily growing. And look at this annual growth here. Just cannot be denied. Slight dip in 23, but the profitability jumped up to north of 20%. And chances are going into 24, again, people are probably going to make up for any losses that they may have been taken in a volatile market. And on top of it, it's an election year. So, people are just going to continue to pile in. But these are the types of stocks that I like to bring to the table. Because no one was talking about Coke a year ago and you're up almost 100%. No one knows that CBOE exists. But again, I brought this to you, I don't remember, maybe it was somewhere back here where I have this arrow, as you see, about 120, right? So you're up 50% now over the longer term, getting paid a dividend, and if you chose to sell, you would pay half the amount in capital gains tax. Stocks like U.S. Steel, again, people forget about U.S. Steel, and that's why I love it. Because at 1970, over a year ago on this channel, I basically knew it was the closest thing to a guarantee to make you a return. And the stock ended up getting involved into a bidding war and goes up to 35, into the 40s, and then eventually 50 with that bid from Nippon Steel out of Japan. So, again, is it boring? Is it not very exciting? Yeah. But if we look at a situation and we have, 90+% conviction rating that over time it's going to grow for us and make us money, then at the end of the day, in my opinion, those are the plays you should be looking for, because that's why we invest, right? We don't want to turn around and all of a sudden just lose thousands of dollars because we bought a meme stock too high. Or we, just rolled the dice with 40% of our account going into like Apple earnings or something crazy like that. Just buy the winners, in my opinion. Slow and steady wins the race. You're basically taking free growth, free profits, essentially, in my eyes, by investing this way. But again, this is just my opinion. This is not financial advice, but I'm going to end it there. So once again, to Stocks by the Numbers, I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.